So that's exactly it. This will legitimize the market because people have been waiting for an institutional fund that's regulated by the SEC, is properly registered, and this will have a big impact because it will validate for everybody else how big the market opportunity is. So we think it's, potentially, ultimately, there's quite a few $1 trillion of assets that are likely to flow into the blockchain ecosystem, and this is really one of the first big steps towards unlocking all that institutional investment money.
But this is not spot. This is not a spot product. This is a futures product. So there's an element of speculation as well, that can also add to the volatility, which people want. People keep debating about when and how will that volatility settle. So that issue doesn't get addressed with the launch of this product, does it?
It doesn't. In fact, this is as close as you can get to a true Bitcoin fund, but it's still not actually a Bitcoin fund. And so I think this is a signal that there will be more funds. People will attempt to find ways to work with the SEC, right? But I am not sure at this point that we should be waiting anymore for somehow less volatility in the Bitcoin ecosystem. We've been talking about this will one day be less volatility for like 10 years and it's not happened. So I think we should just get used to the fact that Bitcoin is likely to continue to be a very volatile asset. And it'll be why there's so much demand for stable coins in that ecosystem, because they'll offer a stable alternative that remains within the ecosystem.
But is that true for all cryptocurrencies? Would Ether be as volatile as Bitcoin?
I don't think Ether will be as volatile, but it's still likely to be relatively volatile. There was an effort earlier this year, a system called 1559, which was set to burn Ether automatically based on transaction consumption. And it has slightly stabilized gas fees. I don't know that it's really made Ether substantially less volatile either. These ecosystems are still pretty new. We don't really know what the long-term volatility looks like, right? We have a 10-year track record at most.
No, definitely. But I'm still trying to wrap my head around what's next. So you have a Bitcoin futures ETF. Are we looking at, a portfolio of cryptocurrencies? Sometimes, I don't know whether there's a benchmark to it, but really like you have sectoral ETFs, right? Are you going to have something like that for the cryptocurrency world as well next?
I think we're going to see kind of two big things next. The first, we're going to see a flood of ETFs, both actual, asset ETFs and futures ETFs, both for Bitcoin, for Ethereum, and probably for some set of indexes of cryptocurrencies. That's the first thing that we'll see. This will legitimize and validate the market segment, not that I think most of us didn't already know that that was coming. Secondly, and I think even more substantially, this will have a big impact on all the companies in the blockchain ecosystem that have held off on actually registering themselves as securities, and the exchanges that have wanted not to register themselves as securities exchanges. They are worried about the cost, the complexity of registration. What this is going to remind them of is the staggering amount of institutional investment funding that's going to be available to them when they choose to invest. And I think this will have a big impact on the Ethereum ecosystem, especially overall.